How do we achieve the highest appraised value in a refinance? Because this is actually a process which we have to control the variables to have a refinance favourable to what we're trying to achieve. And we don't want a bank valuing a property higher than it's really worth, okay? We want a fair market valuation, but in some cases we have to really fight for that. And I'll give you an example, and this happened to me personally. I had a lot of my loans with NAB at the time. Suncorp Bank, this is going back 15 plus years, Suncorp Bank were offering a really great rate if we were to move our loans over. So we moved at the time 3 of our properties over to Suncorp. At the time, I can't remember exactly, it was around $1 million in loans, maybe about 1.1. We accessed this great rate. All right, part of that was a refinance, freed up some money, and I went and did a reno on 2 of the properties. I think from memory, one of the properties that we renovated really grew in value strongly as well. So over the next 6 months, had renovation done and really strong capital growth. Went back to the bank after 6 months, and guess through that time, Suncorp, they'd stopped advertising, right? They really tightened up the books. They had no more money to loan. So these banks like Suncorp, they don't have unlimited money in the kitty. They might have access at the time, say, to a few $1 billion offshore, Singapore, low interest rates. I'm not sure, all the intricacies of the banking world, but it seemed to me like Suncorp wanted to attract clients, had a source of funding, but that well ran dry. So after 6 months, I went back to them, wanted to get a refinance done and access that equity. I think from memory, one of the 3 was actually revalued lower, which was definitely not the case than the original purchase price. And the one that I renovated and it actually had really strong capital growth was woefully undervalued. I think from memory, we're talking 20% less than what I really thought it was worth. And so I really got the indication that Suncorp didn't want to lend any more money. They probably even, in reality, didn't have a huge amount more to lend. They'd, loan their loan book out. Circumstances necessarily changed. They've gone from desperately wanting new clients to not wanting any more clients. And it happened very quickly. So that's a policy or a directive given by the bank. And remember, the banks are the ones that are valuing the properties. Even though they're hiring a valuation company, who's putting, dollars in their pockets? Who's paying the bills? It's the banks. So if the banks are looking at biasing things a certain way, you don't think the valuer is not biased. Very, very, very directly and indirectly, the banks are weighting and biasing the valuers. They're sending business in different directions. They're positioning the property of the client in a certain way, and they're indicating to the valuer where they would like the valuation to fall. All right. So that don't be under any, misconceptions that that's not the case. And I've seen it myself on those properties. I yanked those 3 properties instantly from Suncorp, and I actually ended up taking them back to NAB and got fair market valuations for them. I was very happy with the valuations. If not, on one of them from memory was a very good, strong valuation, even to the point of probably more than it was worth. So as a new customer, sometimes, you can really get very strong valuations. You also then have what I call the causality chain or the linkage. So if you're revaluing a property too close to when you purchased it, your own contract is the most comparable property. They will use that as value. So you might go back 6 months' time, property hasn't changed in value, even though you've done a reno, even though there's all these other comparable sales, it's too close. Yours is still a comparable sale, and your actual purchase is the most comparable sale. So sometimes, you've got a combination of banks being pessimistic, not wanting to refinance or loan out more money, plus the time, ongoing. It might be 12 months before you're able to break that causation. Sometimes you have a shorter period where you can break that chain if you're going to a new lender. But, most of the time when you're going back and refinancing with the same lender, it's a 12-month causation period that we've seen. And then there are also things you can do around positioning the valuation. Having the property manager go through beforehand. Freshening the place up, opening the blinds, making sure it's clean, tidying things up, making sure there's no funny odours. Even being there to receive the valuer and, selling the property, really sort of drawing the attention through to The low vacancy rates. They've just rented another property around the corner for amazing rent, $600 a week. This is going to get more than that if they put it on the market, or it's $500 now, but it's definitely market rent at $600. Drawing attention to the really selling features of the property. If not, and going as far as to giving the valuer a folder with comparable properties that you're inching them, and it has to be done in a very sensitive way. Sometimes valuers get a little bit funny doing that. But you are selling this property to the valuer. You're framing up the standard of it and the other comparables. This is a process. So a good property manager really does facilitate a revalue, a refinance, making sure and requesting that bank is doing a full walk-through valuation. We want to be able to control those variables. We want to be able to make sure the property is presented in the best light. We don't want them just driving past at random hours. We don't want them sitting on a desktop computer just doing a desktop valuation. So we definitely need to manage this process end to end to achieve the highest appraised values in our refinances.